Welcome to today's What Will Move the Market show. I'm your host Prem. It's Monday, November 10th, 2025, and here is everything you need to know as the markets open for today. Let's start with Wall Street's close on Friday, folks. After a volatile week marked by tech sector concerns, the major indices ended mixed but positive. The Dow Jones rose 75 points or 0.2% to close at 46,987. The S&P 500 edged up 0.1%, closing at 6,728. However, the Nasdaq Composite fell 49 points or 0.2% to 23,004. This week's sell-off was largely driven by concerns over inflated AI stock valuations and mounting pressure from the ongoing federal government shutdown. On the positive side, we saw strength in financials, energy, and select mega-cap tech names. The standouts on the upside included semiconductor plays and data center operators benefiting from AI infrastructure demand. On the downside, defensive plays and some of the high-flying AI-focused momentum stocks saw profit-taking. The 2-year Treasury yield settled at 3.56%, while the 10-year dipped to 4.09%, signals of some flight to safety. Now on to Indian ADRs as of the latest close. Infosys ADR was up 1.98%. ICICI Bank ADR climbed 1.21%. HDFC Bank ADR inched up 0.34%. Reliance Industries ADR held steady flat for the session. Overall, Indian ADR showed mild strength overnight, with IT and banking stocks leading the recovery. This is a positive cue for our blue chips heading into today's open. Now let's look at this morning's Asian market performance, and here's where things get interesting. The Nikkei 225 is trading at 50,736, showing resilience this morning after earlier weakness. The Hang Seng is stronger at 26,442, bouncing back with decent momentum. The Shanghai Composite continues to consolidate amid mixed signals from the Chinese economic data. Now, the critical indicator for us, GIFT Nifty, is trading at 25,584 this morning, essentially flat compared to Friday's close. This is a key signal, folks. Despite Asian weakness and global volatility, our index futures are holding their ground without any meaningful correction. This tells us that domestic buying interest remains robust and institutional support on dips is intact. The flatness in GIFT Nifty combined with Asian resilience suggest we're looking at a balanced opening today with neither bullish nor bearish momentum dominating. This is a constructive setup for selective buying rather than broad-based rallies. On the global front, the Trump-Xi meeting at APEC last week has signaled a tentative thaw in US-China trade tensions. There's cautious talk of selective tariff easing and working-level follow-ups, which is positive for global sentiment and supply chains. India is positioned to benefit significantly from this easing, as the China Plus One narrative continues to strengthen our investment case, especially in IT, semiconductors, and manufacturing sectors. Additionally, reports suggest India may join the US-Japan Rare Earth Network, positioning us as a strategic player in global supply chains. This is excellent news for our industrial and precious metals sectors in the medium term. On the domestic front, FII activity remains a key concern. November has started with heavy selling. FIIs have sold about 13,367 crore so far this month, taking year-to-date FII selling to over 207,000 crore. However, domestic institutional investors continue their steady buying, which is providing the crucial support that's kept our market resilient. The narrative here is clear. DIIs are the domestic shield absorbing global volatility. On the policy front, all eyes are on RBI commentary and guidance. Earlier this year, rate cuts and eased provisioning norms have supported credit expansion. Look out for any signals on future monetary policy as the central bank continues to balance growth and stability. Let's look at the technical setup for today. For Nifty 50, the immediate support zone lies at 25,350 to 25,300. This level encompasses the 50-day EMA, a 50% Fibonacci retracement, and a weekly breakout zone, making it a sacred support. Resistance is seen at 25,600, and a sustained break above 25,800 could trigger a bullish move toward 26,000. For Bank Nifty, resistance is logged in the 58,000 to 58,200 zone. The index formed a Doji candle on Friday, indicating indecision. As long as it holds below 58,500, expect a range-bound consolidation phase. Support comes in at 57,500 to 57,000. Now let's look at the commodity complex, which is showing some interesting movements. Gold is trading at $40,054 in US dollar terms, showing strength and holding steady. Silver is at $49.16 per ounce, trading steadily with modest upside momentum. The fact that both precious metals are holding strong overnight suggests investors are maintaining some safe haven positioning. Crude oil continues to show modest strength, indicating that global energy demand concerns remain tempered. Base metals are holding up well, signaling no major macro shocks or demand destruction on the horizon. Here's my playbook for today, folks. GIFT Nifty's flat opening with resilient Asian markets tells us this is a day for stability and selective picking. The market is not showing panic, but it's also not showing aggressive buying appetite. For traders and investors, this is a consolidation play. Watch the 25,350 level like a hawk. A breakdown here would be concerning and trigger fresh selling. Conversely, if we hold and see buying on dips, we could see a move toward 25,700 as the day progresses. Quality financials, mid-caps, and IT names are your best positioning tools today. Strong precious metals pricing gives us inflation hedges and defensive optionality. Don't get greedy chasing rallies. Instead, use weakness to build positions in quality names. That wraps up your morning update. Remember, markets reward patience and discipline. Today is a day to observe, absorb and position thoughtfully for the week ahead. Stay tuned for the evening wrap-up, and please send in your trading ideas and questions. Until then, here's wishing you a profitable trading day ahead. This is Prem, signing off. Let's make today's trading count.